What the banks are doing is, when we deposit our money in the banks, they immediately turn around and lend that money out to get those high rates of returns. But they're also transferring the risk because they're not using any of their money. They're using our money, the depositors. So if anything goes south with those loans, we're at a loss, not the banks. So how can we replicate what the banks are doing so that we can get those high rates of returns like the banks, and also not risking any of our money so that our money is protected? I was diagnosed with invasive breast cancer. Um, I know. And all the treatments, doctor visits, everything, it was north of $275,000. Yeah, which could paralyze any family financially. We were already, hitting our savings. We were in the brink of like, should we sell off all our assets just to pay for my medical bills? I could only think of at that time was really just get down on my knees and pray to God. I kid you not, that same week, my life insurance agent called me and said that she heard from the grapevines about my diagnosis and said that if I needed the money, the life insurance policy that she sold to me when my daughter was born 7 years prior, I'm able to accelerate that, the death benefit, the money that my family would have inherited if that was the time God calls me home. I was able to accelerate that, take that money and pay for my medical bills. And so we didn't have to liquidate any of our assets. We used my life insurance policy.
If you've ever lost a deal because the bank moved too slow, this episode is for you. Today we're talking about building liquidity you control so you can buy, rehab, or lend without waiting on approvals. Welcome to the Dream Start On podcast. I'm your host, Edgar the Connector, and today we have Teresa Villaruz. Teresa is a founder, investor, and a Thrive banking strategist. Today we're breaking down how to make your money work harder for you, especially as an entrepreneur or real estate investor. Thank you for being here, Teresa.
Well, Edgar, thank you so much for having me. This is my pleasure being on the show. Just being connected to you and to your audience is just a blessing. Thank you.
Thank you. That means so much to me. And the audience, please give us a like. It doesn't cost you anything. Subscribe to the channel. It's free. Also, Teresa's a podcast host, and check out her channel after you see this episode. But before we start, this is educational only. Nothing here is financial advice or an offer. All right, Teresa. So people here, be your own bank, and they either get excited or skeptical. In 1 minute, what does it mean and who is it actually for?
Yeah, essentially, becoming your own bank is replicating what the banks are doing, right? Um, and what the banks are doing is, when we deposit our money in the banks, they immediately turn around and lend that money out to get those high rates of returns, like, anywhere from 3.5% to, 30%. Credit cards right now are at 30%, which is insanely high. But they're also transferring the risk because they're not using any of their money. They're using our money, the depositors. So if anything goes south with those loans, we're at a loss, not the banks. So how can we replicate what the banks are doing so that we can get those high rates of returns like the banks, and also not risking any of our money so that our money is protected? So that is essentially what Thrive Banking is. That's what becoming your own bank is. It's really getting those high rates of returns and not risking any of your money.
So now take us back. How did you get into this world?
Oh my goodness. That's a long story, but the short answer is it was in 2021, I was diagnosed with invasive breast cancer. I know. Thank God, by His grace, I am now in remission. And the reason, yes, woohoo! But the reason why I got into this business was because at that time, my husband and I are already real estate investors, but we were asset rich, cash poor, right? Like most real estate investors are. And when I was diagnosed with my cancer and all the treatments, doctor visits, everything, it was north of $275,000. Yeah, which could paralyze any family financially, right? And so during that time in 2022, actually, we were already, hitting our savings. We were in the brink of like, should we sell off all our assets just to pay for my medical bills? And the thing that the thing that I did that I could only think of at that time was really just get down on my knees and pray to God, like, Lord, give us guidance. Let us know we need to do. And I kid you not, that same week, my life insurance agent called me and said that she heard from the grapevines about my diagnosis, and said that if I needed the money, the life insurance policy that she sold to me when my daughter was born 7 years prior, I'm able to accelerate that, the death benefit, the money that my family would have inherited if that was the time God calls me home. I was able to accelerate that, take that money, and pay for my medical bills. And so we didn't have to liquidate any of our assets. We used my life insurance policy. And so that was a huge relief for me. And I thought, if I didn't know this, I'm pretty sure that half of America doesn't know that life insurance has this living benefits, right? And so I dug deeper and got my license, and really initially, tried to sell life insurance for the death benefit or the living benefits. Unfortunately, no one wants to listen to me about life insurance, because to them, most people think that with life insurance, you're worth more dead than alive. And so that's kind of like the negative thoughts there, right? And so dug deeper into more about like all the different benefits of life insurance, because really there's so many, and learn about infinite banking. Infinite banking is essentially, the what I mentioned earlier, where you can leverage life insurance to become your own bank. And so learn more about that. Actually was able to leverage our life insurance for our real estate business and even our boba cafe that we just opened up, and do things creatively, right? And so now I talk about how can you leverage your life insurance policy to, one, become a real estate investor or even a business owner, and using none of your own money. And it's the thing that our mentor talks about, like, being creative so that you can get ahead in life, whether that's investing or being an owner, by using leverage. And life insurance is a huge leverage. And so that's how I got into the business. That's how I'm marrying two things that I'm passionate about: real estate investing or entrepreneurship with life insurance, and helping others thrive as well. And so I rebranded that whole thing into the Thrive movement.
Amazing story there. Luckily that your rep had heard about that and was able to reach out to you and speak to you about that. A lot of
Yeah.
people, reps, employees, wouldn't take that stance. If that hadn't happened, you would have probably had that life insurance still sitting there, not
Hmm.
knowing that you could use that tool to your advantage to get you out of that hard spot. Man, shout out to that rep.
Yeah. Her name is Marie Cabanilla. She's actually my husband's aunt. And that's, I think, someone from the family leaked the diagnosis to her. And so it was just a blessing in disguise. I didn't know that something that I had purchased 7 years prior would save my life, by the grace of God.
Yeah, that's great that you've been able to pivot from there and go from to being so worried to being able to educate other people and using the platform now to help it. If you have life insurance, you should reach out to your agent, your reps, and see if that's the same situation, because there are so many different types of life insurances.
Yeah.
So everybody thinks of just regular life insurance, you die, but there's like the infinite banking ones you can do, which is totally different than your standard life insurance.
Yeah.
So what, I guess you got your life insurance because your daughter was born.
Yes. So, to be honest, initially we were, they were talking to us, or she was talking to us about getting a policy when our daughter was born, and we were thinking, you know what? We have assets, we have homes, rental properties, that we are okay financially. We don't need to buy life insurance. But she just kept pushing and pushing, and to be honest, I really just bought the policy just to get her off my back. I was like, fine, fine. You keep hounding me. Let me just get it, whatever. But that, I am now so grateful that she was relentless and, really got me covered, because if it wasn't for that, who knows? Like, I would be stressing about, my cancer, and then also having to stress about the financial burden of the disease. I wouldn't know if I would have survived that. So just having to be able to kind of, focus on one thing, which was my health, and not worry about the financial stress, was really a blessing in disguise and allowed me to really beat the disease, right?
Yeah, such an invaluable lesson there. It's hard when somebody, we know this as real estate investors, as entrepreneurs in general. Most of the time, your family's there. They just like, oh, that's your brother or your cousin. That's just so and so. They're trying to sell you something. Not even trying to sell it. You're trying to say, hey, join me because there's so many potentials. And so it's hard when somebody's offering you life insurance. Are they doing it for them? Are they doing it for me? It's hard to tell, unfortunately, that we get to that point. But good thing that, that worked out for a reason, right? Part of the Dream Start On podcast is to start. And if you haven't started by getting your LLC, or if you need another LLC, use the link below to get with PCS, Prime Corporate Services, and they'll give you a consultation to walk you through getting your LLC. You can do it yourself, but they're going to walk you through it. They're not going to charge you extra than what you would pay doing it yourself. And they know how to set up the LLC appropriately to be protected, to get your operating agreement, and to make sure that you're coded correctly for the most business funding. Why do you want business funding? Because it doesn't affect your personal credit as much, and you can get so much more to help you scale faster, move faster, and grow faster. So use the link below to get your LLC set up with Prime Corporate Services. Now back to the episode.
Yeah, it absolutely worked out for a reason. And kind of like just piggybacking on what you said, where not all life insurance policies are the same. It's not, because if, there's actually two umbrellas that I will put life insurance under. One is the traditional kind, which only pays out really if something happens to you, whether that's you get too sick or God calls you home, right? The type of policies that I focus on now is what I call the Thrive Banking policies, because these types of policies have two components to them. One is that obviously it's life insurance, so you're covered if anything happens to you. Second is attached to your contract, whether you use it or not, so might as well use it. And that's the cash value of your life insurance policy. I compare this to similar to like a high yield savings account, because it's a savings account within your policy, and it could earn anywhere from 3.5% to 6, 7, 8%, or even more, depending on the type of policy that you get and how you allocate your money within the policy, right? So right now that's what I'm focused on, because you could actually leverage that policy while you're alive for, whether that's investing in real estate, for using it as an emergency fund in case something happens, like, a leaky roof or something. You have access to that cash without any questions.
Okay, well, we'll deep dive into that a little bit more later on.
Yeah.
So what I do want to get into is like, you said you were financially well off at the time before you bought your insurance. You had your daughter and you got it. And I think most people like myself, I haven't got life insurance yet. It's not, most people don't have a money problem. We have a control problem when it comes to money. So let's explain the concept simple, like I'm a ninth grader. What problem does having this infinite banking solve for entrepreneurs and investors when it's done right?
Yeah, when it's done right, right? Especially with the cash value that's attached to the policy. Think of it like, let's just say, growing up, you're told to, earn money, save, and invest, right? So this is the saving part, putting your money in a safe vehicle so that it grows, compounding, right? So as they mentioned before, like compounding is the ninth wonder of the world, where your money just grows and grows, and you don't necessarily have to do anything with it, right? So once you save it in a tool that compounds annually, such as a cash value within your life insurance policy, you're allowing your money to grow there, right? But how does it benefit an entrepreneur or investor is that you have access to this as if like it's money in your traditional bank. You have access to this. And the beauty about this is that you can actually take the money out to invest in real estate, or use it for, let's just say, a college, a student or someone who wants to go to college, they can use it for college as well, or whatever you decide that money to be used, you can use that. The beauty about this is that when you take the money out in a way where or as a loan, right? When you take your money out as a loan, you're actually technically not using your own money. You're just using it as leverage, or as as leverage to get a loan from the policy, from the life insurance policy. So whatever you use for your business or investing or whatnot, it's the life insurance company that you're using, or the life insurance company's money that you're using, not your own money. Which means that your money that's in the savings account of your policy is still earning that compound interest, right? So, and then you're using the life insurance company's money to get into these deals, or get into, pay for tuition or whatnot, which is great because, that's exactly what the banks are doing, right? If you think about it, when we deposit our money and they loan out, they lend out money to investors like us, right? They're using our money, that not their money. So the interest that they're gaining from, lending out that money, they're getting that as a return on our money. So how can we do the same thing? Let's just make sure that, we put our money in vehicles that benefit us, not the banks, right? Hopefully that answered your question. How does it benefit investors or realtors or real estate investors, and entrepreneurs? It's really just learning how money works, and how can you leverage things so that it works for you and not for the banks.
Yeah, definitely. So you have control, liquidity, and optionality. That's
Mm-hmm.
all pluses to have your money instead of using the traditional bank, you being yourself and basically
Yeah.
cutting out a middleman. Um,
Exactly. And just to kind of like piggyback on that, right? Let's just say you need a loan for an investment property, right? You go to a traditional bank, there's so many things that you have to, or so many hoops that you have to jump through. You have to, show, like, you have to fill out like thick paperwork, and then you have to show your tax information, and like all these things that you have to jump through in order to get a loan from a bank, or even from a hard money lender or whatever, right? Lenders. But if you're taking money out or taking a loan from a life insurance company, you don't need to do all that. It's a one-page form that you have to submit to the life insurance company, and all they do is they take a look at how much you're requesting. Do you have that amount in the cash value of your savings, the savings component of your policy, right? And if they do, then okay, they'll give you a loan, because they're just gonna use your savings account in or the money in your savings account in your policy as leverage. That's your collateral. They're using it as collateral, right? So as long as you have that amount in your savings account, they'll give you a loan. No questions asked. They don't even need to know what you're going to use the money for.
let's improve your sleep, not by buying a new mattress or by changing your sleep time, your sleep hours, or how much sleep you're getting. As an entrepreneur, we know that you're not going to get more sleep most of the time. Check out 8 Sleep, the pod. It's a sheet that goes around your mattress, has these tubes where water runs through, and it'll adjust your temperature based on your preference. So you'll stay consistent temperature all night, and it'll adjust through the algorithm your consistent temperature. Sleep deeper at night, sleep better. My version I got was with the adjustable base. So when I'm snoring, it helps adjust it and reduce the snore, which is very good for myself to sleep longer. I toss and turn less, and my wife likes it too. Happy wife, happy life. Back to the episode. Fantastic. Make it simple, have so much less paperwork, and you're already, and it's your money, kind of. It's still growing, and you pay yourself back instead of
Mm-hmm.
just putting it away. So
Yeah.
it's hard for people to understand that when they don't understand the things of money, the flow of money, the velocity of money.
Yeah.
So let's walk me through a simple deal example using clean numbers. If an investor puts in X per month,
Mm-hmm.
when does the liquidity show up? When are they actually able to use the money?
Yeah. As soon as it clears the life insurance policy, usually, okay, so let's just say that you start a policy today, or you apply for a policy today. It usually takes about, anywhere from 48 hours to 6 weeks to get approved for a policy, depending on several factors, right? Some of the factors to get approved, is your health condition and all that stuff, right? So, Some of my clients have been approved instantly. Some of my clients, it took 6 weeks to get approved, right? But as soon as you get approved and the life insurance company um, uh, gets paid for the premium, right? The premium is your monthly payment or your annual payment or whatnot. Once that clears the bank or their bank, um, then you have access to the account. So it's anywhere from clearance could be anywhere from 24 hours from the time you get approved to, you know, 2 weeks. So really, as soon as it clears their bank, you have access to that money.
Okay. And once you start borrowing money, how does the repayment work, and what discipline is required for the user taking their own money out?
Yeah. So this is where becoming your own bank is actually really smart, right? Because when you become your own bank, you define your repayment terms. So you can pay it back like a mortgage, for example, and pay it on a monthly basis. As an investor, if you're using that to, let's just say, flip a house or buy a rental property, you can repay it back when the deal closes, right? When you get your money back from the deal, then you repay the loan. Or because this is a life insurance policy, you can decide, you don't have to pay for this loan in this lifetime. And the life insurance company is okay with that because what they'll do is rather, when God calls you home, rather than you having to pay back the amount on a monthly basis or whatnot, when God calls you home, they'll just subtract the outstanding loan and any unpaid interest from the death benefit before releasing the rest to your family or your beneficiary.
That's very insightful. To be able to take that out and not have it to repay it if something emergency fund comes up and you can't work. And
Mhm.
okay, for investors, what do they usually use this money for?
For investors, they can, like I said earlier, you can use it for any reason you'd like. For me personally, we've leveraged our policy one to furnish our rental properties. So we're focused right now on midterm rentals. We do have some short-term rentals still, but we want to kind of offload that and get into or re- we want to offload our short-term rentals and really focus on midterm rentals right now. And then another thing that we've done is we've actually leveraged our policy to for the startup cost of our boba cafe that we just opened up last November. So we did that creatively. The startup cost, nothing out of our own pocket. We've used the life insurance company's money as well as some investors. So that's doing it creatively. Another way that we've done is through private money lending. So my daughter, who just turned 12, is actually a real estate investor or lender. Yeah, so her policy, what we've done is we've flowed her money into a policy first and then took it out as a policy loan to invest in flips, right? That has a return of 12% annualized, right? So if we just used her money directly and lent it out to get 12%, that's all she's getting, 12%, right? But because we floated into a Thrive banking policy for her first, which is right now earning 8%, and we borrowed money at 4% or 4.5%. So even if we use that money to go on a vacation, she's still netting 3.5%, right? She's earning 8%, borrowed at 4.5%. So she's still netting 3.5%. But because we wanted her to start in this journey of really being smart with her money, we used that borrowed money to invest or to lend out as a private money lender. With Pace actually. So she's earning 12% on lending money to Pace. And so now that same pool of money, rather than just earning 12%, she's now earning 12 plus 3.5, so 15.5%. So through Thrive Banking, not only one is she, protecting her money, two, increasing or making her money work in two places at once, one in her policy and in private money, but she's also increased her net return, right? So that's the power of really understanding the tools that you have, leverage and all that stuff. So yeah, that's what we've been doing with our policy so far.
Brilliant. 15%, 12 years old, investing with Pace Mortgage. Shout out to Pace. For parents out there, how do they get over that mindset? People talk about the religion, talk about universe and being like bringing positive flow, but you go take out a life insurance on a child. I think people are like, no, I don't want to do that because I'm calling for something bad to happen. How do
Mm.
you get parents to get out of that mindset?
Yeah, I mean, I would say think more of the benefits than the negatives, right? So the reason why we got a policy for my daughter is one because I've had experience in leveraging life insurance when I was diagnosed with cancer, right? So cancer is prevalent in my family. My grandfather on my mother's side, my mother's sister, myself, and then my niece on also on my mother's side. So 4 generations straight on my maternal side were diagnosed with cancer. I'm the first survivor. And that's because I truly believe that I didn't have to worry about my, medical bills, and I was able to focus on my healing or beating the disease and then healing. And because 4 generations in my mother's side have been diagnosed with cancer, I'm assuming that my daughter has a high risk of getting the C word as well, right? So I purchased the policy just so that she doesn't have to worry about her medical bills in the future if that, God please know that happens to her as well, right? Because now she has life insurance that she can leverage to pay for her medical bills and not have to worry about that and just focus on her health. And two, because we're our own story. We've used our policy for other things, other things as well, for entrepreneurship, for lending out as a private money lender and all that stuff. Because we've done this, we've seen how it worked for us. Like, we've got our daughter 2 policies. So again, to get out of that mindset is like, think about all the benefits of these tools, the financial tools that you have around you. Think about the benefits, not the negatives, right? And if you want to think about the negatives, let's just say, if something happens to your child, you want to, like, if God calls your child home, you want to grieve properly and not have to worry about their final expense, the burial, and all that stuff, right? So if you're gonna go that route and think about the negatives, if this, you're calling something by getting life insurance, but what if that happens? Like, there's 2 things that are guaranteed in this life. One is death and one is taxes. So you're just preparing for the inevitable. That's what it is, right?
Well said. Parents out there, if you listen to this, it's a great way to protect yourself and them. If it happens to you, if it happens to them, because I lost my brother in the war,
Mm.
and I've never thought about the life policy if there was one or putting one on there, but this makes sense if there was one there that could have easily helped out my mother with her living expenses today, and not trying to make it like a selfish thing. It's
Yeah.
he would have done it to help keep her in a better place financially as a you know parting gift, I guess you can say. It's hard to talk
Yeah.
about death and money, and you feel like
Yeah.
maybe you have the thought that you're taking advantage of somebody's life, and that's not what we're trying to do.
It's
Um,
not.
but that's great. I know you at 7 when you got your policy, you were like completely against it. Now you're like, hey, get a policy, get a policy. Everybody gets
Yeah.
a policy, and you get 2 policies, which is amazing that you're able to do that. Are you able to get multiple policies with the same life insurance company?
Yes. So you could, but what I would recommend is there's policies there where it's actually flexible, right? So let's just say that right now your policy, you could only afford, let's just say $100,000 of a death benefit policy, right? And then let's just say 2 years down the road or 5 years down the road, things have changed and you're better, financially well off than you were 5 years previously. You can actually adjust your life insurance policy to increase the death benefit so that you can put more into the policy. So yeah, there's just so many different products now, and these products are, there's a lot that are more flexible than the ones that we were sold like a decade ago. But yes, you could, to answer your question, yes, you can have multiple policies. Yes, you can have multiple policies from the same carrier, but it doesn't make sense if you can just increase the policy that you currently have.
Interesting. Learning a lot. Thank you so much. For, for people that are looking at that let's say, what is the advantage of having that life insurance over somebody using their for investing? In purpose of investing is over like a HELOC or having a bank credit line.
Yeah. So if you have a bank's credit line, right, you're using other people's money, but you're not growing your own money. Well, actually, if you put your money in the savings account, it's earning there, but then also you're getting you're borrowing money from bank and you're making money for the bank, right? In this case, if you're leveraging a life insurance policy, again, you're one getting a higher rates of return than a traditional bank account, right? So savings account right now is earning anywhere from 0.25%, or if you put it in a CD, it's 3%, right? 3 to 4%. So great. It's getting those, you're making your money work, but it's not working as hard as it should be. If it's in a policy like a life insurance policy, it's anywhere from 3.5% or higher, right? Depending on how you allocate your money in the policy. My policy right now, my daughter's policy, is earning 8%. So that's higher than any savings account that you have out there, right? So really knowing the tools that you're putting your money in. And by putting it in there, you're actually making your money work twice as hard when you actually take out a loan from your policy and use it to make you more money, such as investing in real estate. Because kind of like how we've done it for my daughter, again, her policies earning 8% for her, and by borrowing that at 4.5%, financial arbitrage, using borrowed money and making it work for you to earn you higher rates of return than the cost of borrowing that money. So she's earning 8%, borrowed at 4.5%, 3.5% net still, and using that to invest in real estate or lending it out at 12%. It's a no-brainer. You're now earning 15.5%, right? Versus if you use a HELOC where, you're borrowing against your policy and your money is only earning, let's just say in a traditional bank, 0.25% in a savings account. Like, it just makes more sense to make your money work harder.
Completely agree with that. Let's pivot a little bit. Let's protect the audience. When is this a bad idea? Getting the life insurance. What are like top 3 mistakes that you see when people get a life insurance?
Yeah, I would say, I mean, life insurance is always a good idea because you're protecting you're protecting your family, life insurance. Where it becomes not a good idea is when you take out a loan, right? And you use that loan to spend on frivolous things, whether that's like, buying a new car, even if you don't need a new car, your old car still works, right? Or going on a luxury vacation. So it doesn't make sense, or for me, it's a bad idea if life insurance is never a bad idea. It's a good idea. It's more of like how do you use that money is a bad idea, right? So when you're borrowing against your policy, make sure that you're using it the right way. You're using it to make you more money versus spending on things that is going to get you in more debt. Because it is debt when you take it out as a loan. It is debt. So make sure that whatever you use that money for, you're leveraging financial arbitrage, using that money to make you more money higher than what the cost of borrowing that money is.
Financial arbitrage, using some big words there. So yeah, for people listening, money's going to get used, But using it properly is one thing. If you use it wrong, you're wasting it. You don't want to waste your money. Or get your mentality of using your money properly, and money arbitrage is basically using money to build money. So I
Exactly.
mentioned this before for those out there, turn your money into an employee that's working for you, generating more money. So you can either do an employee that's going to sit there and waste your money, right? Or you can have a top-notch employee that's making more money for you if you're using it wisely and not wasting it.
Amen to that.
Heck yeah. So let's see, if they're spending the money correctly, they have their policy. What should someone ask before they do anything? For I guess when they're going to get their policy, what questions do they ask before they get into it?
Yeah, I would say really um, think about, well, whenever you whenever you get a policy, you have to think about first it's life insurance, right? It's life insurance first, but before it's a financial tool for investing or whatnot, or using it as an emergency fund. So first think about like what does your family need? You know, if something happens to you, what does your family need? So let's start off there as a basis. And then second, what are the things that you want to use this for? Is it just for an emergency fund? Great. Or are you looking to leverage it for, Thrive or infinite banking so that you can, use it for financial arbitrage, make more money for you? If so, like what are your goals then, right? And then just to make sure that you get the right policy, and you're working with the right agent, because I kid you not, 95% of agents out there don't know how to structure a policy correctly if it's for Thrive Banking, right? Or for Infinite Banking. Because most of these agents are trained to sell the highest amount of death benefit, right? Because that's where their commission is going. So with Thrive Banking or Infinite Banking, for this type of policy, if you want to use it for, to for the living benefits and use it for investing or as an emergency fund or whatnot, I would say that, work with an agent who knows how to structure it properly. Because what we do is we look for the least amount of death benefit that you can purchase for the budget that you have. And the reason for that is because when you have the least amount of death benefit, most of the money that you're giving to the life insurance is actually going into the savings account, right? The higher the death benefit, the higher the cost of insurance. The lower the death benefit, the lower the cost of insurance, which means then, you just want to structure it so that properly based on your goals. So talk to an agent, see if like, uh, what type of policies they usually, create for their clients. What are the things that they like you just listen about, like how do they pitch the life insurance to you, right? Is it more about like life insurance? Great, because you do need that. But then what, like ask them about Thrive Banking. Have they used it before? Have they done it before? If not, then unfortunately they might not know how to structure it properly. Yeah, so really, I like the questions to ask is like, how do you structure policies for this goal, right? Um, and then also, what are the benefits or the living benefits included in the policy? Because not all policies have the same coverage. For example, for my policy, I was lucky enough that I had, the riders, the critical illness, chronic illness, and terminal illness riders on my policy. If those riders weren't in the policy, I wouldn't have been able to leverage that for paying my medical bills. I wouldn't. So ask about the riders. What are the riders that's included in the policies that they sell? Is it an add-on? Is it an additional cost, or is it part of the policy? Because some carriers actually include that in the policy at no additional cost, right? These riders, all the carriers that I work with include those riders in their policies at no additional cost. So things like that, like really, first things first. Step one is think about your goals. Why are you buying this policy for? And then two, make sure that the agent that you're working with is someone who has structured the policy based on the goals that you want to use it for. And then third is really make sure that the riders, these riders, illness riders are included in the policy, because those are your emergencies just in case you get sick, right? Because nowadays, I don't know if you've seen the stats, but 77 out of 10 Americans will get diagnosed with either cancer, heart attack, or stroke. And those are all illnesses that's covered by these riders.
Invaluable information there. Thank you so much. With most of them do cover pre-existing conditions. I think that's one of the biggest, words these
Yeah.
days.
So pre-existing conditions, it depends. It doesn't necessarily cover what's already like pre-existing, but anything new it might cover, right? So, for example, there are 16 plus qualifying illnesses. Cancer would be one. Alzheimer's would be one. So, unfortunately, if someone's already diagnosed with Alzheimer's, you won't be coverable, right? There might be some carriers that would consider giving you coverage, but if you already have any of these 16 illnesses, they might be more, they might not cover you. So it's better to get covered now while you're healthy and young versus when you're old and diagnosed with who knows what, right? So pre-existing, unfortunately, those can't, they don't qualify to be covered, but that's the reason why you need to get a life insurance policy right now while you're healthy and young.
Yeah, well said. Switching over a little bit to private money, and then
Yeah.
people listening to this is a strategy, not a shortcut for making money, for using your money, for getting loans to get that money to be investing. So if someone wants to become a private money lender,
Mhm.
how does this help them? Hey, for those of you that need some EMD, earnest money deposit for your wholesale deals, or if you need to do a double close, or if you're doing a Morby method and you need that percentage gap funded, get with Josh Smith at Foundational Funding. Get the link below. He'll do transactional lending. He did it for me. We got a fourplex and he was able to help out with the 30% that we needed to get the deal knocked out, and excellent service they provided. They take care of all the details, and they spent a lot more time than I expected they would with the lenders to get it over the finish line. So tell Josh I sent you. The links below. Back to the episode.
Yeah. So the beauty about Thrive Banking, if you want to be a private money lender, is that you're not using any of your money to be a private money lender, right? You're using the life insurance company's money to lend out. And that's the beauty of it, because you're doing exactly what the banks are doing. The banks are borrowing our money when we deposit our money in the bank. They're borrowing our money. Really, that's what they're doing, because they're turning around and using our money to lend out as a lender, right? So you're just replicating the bank. Why not borrow money from the life insurance company to be a private money lender and lend out on real estate, on businesses, or whatnot? So that's essentially what it is. How can this
Great.
benefit you as a private money lender? You're being a lender without using any of your money.
Fabulous. When people are getting their first policy, let's say I sign up for a policy and I get one that's $100 a month. I don't know if
Mhm.
these are legit numbers. What I mean, how soon will I be able to start investing, and will I be only able to invest every 100 that I put in every month? So let's say after 1 year I put in 1,200. Is that what I'll be able to lend out?
Yeah, so you have to think about that. Whatever premium you give the life insurance company, they're gonna take out the cost of insurance from there first, right? So let's just say $100 a month, just for math's sake, can get you $100,000 death benefit. The 100,000 death the $100,000 death benefit is not what you can leverage. What you can leverage is what is going into the savings component of your policy, right? So that $100 that you put in every month, a portion of that goes to paying the death benefit, and a portion of that is going to your savings account. So that $100 is not even going to be what you can use for investing, for being a PML. So most life insurance agents, because they do sell the highest death benefit that they can sell you for your budget, will probably see 90%, 80 to 90% of that $100. So let's just say $80 is paying the cost of insurance, which leaves only $20 to go into your savings account. That is a poorly structured policy if you're going to leverage this for life insurance, or for being a PML. How I structure it usually is that the cost of insurance, right? We're buying the least amount of death benefit, so that the cost of insurance is roughly anywhere from 10% to only 20% of what you're paying the life insurance company, so that 80% or more is going to the savings account of your policy, which is what, again, you can leverage, what you can use to take money out, right? What you can use as collateral for a policy loan. Now, if you're only putting $100 a month and only $80 a month is going into the savings account that you can use as collateral, by the end of the year, 80 times 12, that's what, math is not my strongest suit, but that's
960. 960. No worries.
960. So 960, that's not enough to get into PMLing, right? So again, think about your goals. What are your goals by the end of the year, or maybe in 3 years, or maybe in 5 years? You want to have X amount of dollars in your savings account so that you can start becoming a private money lender, and reverse engineer that. Maybe that's $500 a month. Maybe that's $1,000 a month to pay the life insurance company. But again, you have to make sure that your policy is structured properly so that most of what you're giving to the life insurance company is actually going to your savings account, right? So I would say whatever your goals are, reverse engineer it. Start with your goals. Where do you want to be? And then reverse engineer that so that you know exactly how much you need to put into the policy.
Goals. I think that's something that's very hard for most people is, I want to do everything, but what is your goals to fine tune it and set yourself your goals to set up? So if somebody starts off probably suggesting, let's say myself, I start doing this and I do minimum, but I want to do the smaller percentage for the death benefit and the max to savings. So it might take me 2 years to start getting enough money to use for a PML. And let's say I get a windfall of money. Am I able to add more money to my savings account at any time, or do I have to stay within a certain monthly budget?
Yeah, so it depends on the policy that you get, right? Under the cash value life insurance policy, there's multiple product lines under there. There's whole life insurance policies, there's index universal life, there's variable life, and so many more. I would say that if it was a whole life insurance policy, unfortunately, you're kind of fixed on that, how much you can put into there, right? It is what it is. It's fixed. That's what whole life is. If you have an IUL or index universal life insurance policy, that has more flexibility. We can just go and tell the life insurance company, hey, we are in a better financial situation. Can we increase the death benefit so that we have a bigger bucket for our savings account, right? If that's the case, yes, you can increase how much you can put into your policy. However, only to a certain point, right? You can't be like, say, hey, life insurance company, I used to be putting $500 a month in my policy. Now I want to dump in, $500,000. It's not, because what's going to happen is you're going to trigger a MEC. So a MEC is short for Modified Endowment Contract, right? Because what happens is, like, if you want to buy a life insurance policy, you have a certain threshold of how much you can put into the policy in order for it to be still treated as a life insurance policy, right? So you want to max fund your policy, but not overfund it. When you overfund it, what happens is it triggers a MEC. Now the IRS sees that you're using this tool not as a life insurance, but rather as an investing tool. And so now they're going to be able to tax you. So we want to max fund it because life insurance policies is not taxable, right? It's life insurance, not an investment. So it's, we want to max fund it, but not overfund it. so that you kind of don't have to pay taxes on the growth of your money in there.
Definitely. Okay. I guess that's when somebody does get financially better and can start investing more, that's when they want to get an additional policy at that time.
Yes.
That makes
So
sense.
I would say try to increase your existing policies to what's allowable, and then if you still have money to put into a policy, then start another policy.
When people get policies, can they do like a payment per year, or does it have to be a per month? I'm thinking like we're close to tax season now. When somebody does get a good chunk of change for taxes, instead of spending it on dumb things, they should put it into a life insurance and just pay it all up front. A lot of people, if they have that money sitting in the bank, they're going to spend it.
Yeah, yeah. No, absolutely. That's a good question. Yes, you can do so there's different payment plans. You can either do it monthly, quarterly, semi-annually, or annually. So if you want to fund it with your tax, your income tax return, then do it annually for sure. The only caveat there though is that most carriers, if you fund it on an annual basis, what would happen is that they would require a check versus a direct deposit. And if that's the case, that means then that the way for you to take out money is the way you put in money, which is by check. So if you need money and you want to use the money, or you want to take out a loan from the life insurance policy, they will send a check to you. So what I would recommend, because if it's a monthly payment, they will have direct deposits. They will link your bank. So I would always recommend do a monthly payment plan, even if, like, let's just say tax season, your policy, the max you can fund it is, let's just say $10,000 for the year. Put 9,000 in at tax, once you get that return, and then that remaining 1,000 is what you pay on a monthly basis. Just so that your bank account is linked to your policy, so that when you want to take money out, either as a withdrawal or a policy loan, they send it to you, to your bank, wire transfer, versus having to mail you a check, which could take, you know, 2 weeks or what.
Yeah, there you go. Tricks of the trade.
Yeah. Yeah.
So that's where the discipline part has. People have $1,000. Oh, I'll make it. Let me spend it now, and
Yeah.
instead of saving it there and putting it to use it wisely.
Exactly.
Okay, going back to the private money lending. If someone wants to borrow private money, what makes them fundable?
Ooh, okay. So there's different things, right? Um, vetting the borrower and the deal. The deal has to make, well, first and foremost, the deal has to make sense. Is it actually going to return to you? Because if you're leveraging your life insurance policy, that's a loan that you have to pay back with interest, right? Whether that's tomorrow or when God calls you home, there's interest because it's a loan that you're taking out from the life insurance policy. So the deal has to make sense. The number has to make sense, so that it's covering the cost of borrowing that money, right? And then also all the securities that's included, the deed of trust, no personal guarantee, although personal guarantee is just kind of like, yeah, but have all the layers of protection, the usual things that we have for PMLing. And then two, vet the borrower. I I am fortunate enough that the people that I trust my money with are people who are trustworthy and have been vetted. But I've seen stories, so many stories in the community where people are losing money because they just trusted someone like too soon. So vet the borrower, create a relationship with that borrower before you even lend money to them. Check their background, check what have they done, get the HUD ones of all the different projects that they've done, right? Do they have a history and all that stuff? So have they borrowed from other PMLs before? Talk to those PMLs, really vet the borrower. And then third, the beauty about using Thrive Banking is it's adding a third layer of protection, right? So first protect or is not a third. it's adding another layer of protection, because even if, like, let's just say let's just say that you use your own money, right? Let's just say that you're being a bank using your own money. You let Mr. Fix and Flipper comes to you, Edgar, I have this fix and flip, I need $50,000, right? And if you lend it to me, I'll give you, 15% return on your money in, let's just say, 2 months. You're thinking, whoa, that's a good deal, right? The numbers make sense. So you lend your own money. But what if, like, Mr. Fix and Flipper is a bad actor and goes to Italy and never comes back, runs away with your money? You just lost $50,000, right? That you can't recover. But let's just say that you flow your money in a life insurance policy first. Have $50,000 there. That $50,000, you use it to get a policy loan, right? And that $50,000 is what you lend to Mr. Wholesaler. Now, if he runs away with that money, yes, it's sort of your money, but it's the life insurance company's money. Your money is still safe in your policy, earning that 8%, 8, 9, 10%. So, yes, you lost money, but you don't have to pay it back until God calls you home. So, that's essentially, how PMLing works with Thrive Banking, is that you're making your money work and you're leveraging other people's money to lend out. But first, vet the borrower, vet the deal, make sure that it all makes sense before even lending, whether it's your money or the life insurance company's money.
Excellent information there. Time has been flying by. We're almost at an hour. You've been dropping so much knowledge bombs here. Give us a like. Please subscribe to the channel. Let's do some rapid fire questions to get moving. I want to be respectful of your time. So, one sentence, what's the best first step for someone starting from scratch?
Best step is really understanding, how money works and fixing your mindset, right? Because a lot of people, what they want to do is they want to hold on to the very thing that they have and not open up and, look for tools. They just want to hold on to the things because they don't know what they don't know. So before you jump onto anything, do your due diligence, learn about how money works, fix your mindset. And then before you even get into a policy, make sure that you do your research. I can tell you as much as I can help you out, but do your own research.
Incredible. A belief that helps you win financially.
Yes.
One daily habit that makes people financially unkillable. What do you think?
One daily habit. Knowing your goals and how to get there, and taking a look at that every single day. I have it actually here. So I have my goals, I have the tasks that I need to do, and just looking at that every single day so that you stay on track. Because what kills people is shiny object syndrome and just getting on everything and everything. If you have focus and you have your goals right in front of you every single day and you know the steps to get there, focus. Yeah, that's what I would say.
100%. You got to know your goals. You got to find them. You got to focus on them. I'm bad about doing it. I have so many, but I was told this: if you don't pick one, you're going to lose all of them. So even though you want to do all those, set yourself a timeline, write it down. Teresa, where can people find you and learn more?
Yeah, so they can find me on Instagram at Build Wealth with Trey. That's kind of like a mouthful, but they could also go to my website, teresavillaruz.com.
Excellent. We'll also have it down below in the description. What's one message you want the Dream Start audience to remember?
I would say it's figuring out how you can have better control over your finances. Right now, control is the government has control over your finances through the IRS. The bank has control over your finances because you have to put your money in there. So figure out ways on how you can have more control of your finances and your life.
Well said. If this helped you out, subscribe, share it with a friend, and leave a comment below. That's how we grow. Check out Teresa's podcast, Your Money, Your Rules, and you also have your book, right? Your Money, Your Rules.
Yep. It's available on Amazon as well as Barnes and Noble.
Oh, paperback copies, Amazon. Yeah, I saw it. Excellent. Well, I was a guest on our podcast too, so you can
Yes.
find that there if you want to learn more about me and her interview style. She was very well prepared and happy to have you. And then I guess if people want to get insurance with you or become a private money lender with you, do you want them to reach you at Instagram or at your website?
Yeah, I would say either or. I'm very active on Instagram at Build Wealth with Trey, or because that might be too lengthy, just go to teresavillaruz.com and all my information is there.
Excellent. And then I noticed you do marketing as well, digital marketing.
I do. So 15 years of experience helping corporations in Silicon Valley grow and make money. I'm finally doing that for the average Americans. Where if you're an investor, a Gator, a contractor, I'm helping you with marketing. I can help you with marketing.
She's a jack of all trades. Teresa, thank you for coming to Dream Start On podcast. I appreciate you. And we will see you on the next episode. Be sure to catch this other episode to start your dreams and own your time like these other guests have.